What's up guys, welcome to a new video, welcome to my YouTube channel. In today's video I'm gonna go over fair value gaps. Fair value gaps is something really important. It's everywhere. It's in all the markets. It doesn't matter what time frame you use, they are always gonna be there. Me personally, I use fair value gaps for almost everything. It's a really strong confluence that I use for my trading strategy, and it just really helps me very much. So let's jump right into the charts. So as you can see, we are on the S&P 500 index right now on the 5-minute time frame. And to start with, fair value gaps, they are also called imbalances or liquidity voids. It depends on the person. I just say fair value gaps. Most of the times you're gonna hear fair value gaps, but also imbalances. So if you are like watching a YouTube video or you're on social media or internet and you hear imbalances, this and that, don't get confused. It's just another word for fair value gaps, really simple. And now, what is a fair value gap? A fair value gap is a spot where the market moved so fast that no real trading occurred in the middle. All right, this means there were no contradicting orders. For example, sometimes you just see that prices, for example, in an uptrend and prices going up like this, and then suddenly it has this massive drop up, it has this massive drop up. That means that when this candle formed, this big candle, there were no contradicting sell orders, and that's why price moved so fast to the upside. And same as in the downtrend, right? Sometimes you can see the market is in a downtrend, and then it has a massive drop down, like this. That means there were no contradicting buy orders. So price is shooting really far down, actually, in this case. Okay, that's what I mean with there are no contradicting orders. Most of the times, fair value gaps, imbalances, they act like magnets, pulling price back to fill the gap. And I promise you guys, like most of the times, I would say 90% of the times, this gap gets filled. Like seriously, it's for me personally, from my own experience and from what I've seen, it's very rare to see a fair value gap, not getting filled. Okay, it's always a 3 candlestick pattern. It can never be 2, it can never be 4. It's always a 3 candlestick pattern, and we measure it from the wick from the first candle till the wick of the third candle. So I'm gonna draw this for you. Let's say I'm really bad at drawing on TradingView. Let's say, okay, these are candlestick. I'm sorry if it don't look like. Now let's say that this wick is all the way here and the wick from the third candle is all the way here. Okay, like I said, we always measure it from the wick from the first candle till the wick of the third candle. What can we see? We can see between the wick from the first candle and the wick from the third candle, we have this space, right? There is this little space, and this is the fair value gap. So this will be the fair value gap, right? You can see that there was this space in between them. If the wicks would have been longer, like this, all the way, there would not have been any space. There would not have been a fair value gap. And that's it, guys. It's that simple. It's really that simple. Now, if you go back to the text, it can be bullish or bearish. In this case, this was a bearish example. But if I draw a bullish example, nope, it's gonna be the same. And then the wick from this, like this, let's say. And you can see that those wicks, they don't overlap like this, the middle candle. So what do we have? We have a gap, and this is fair value gap. That's it, the imbalance. It's pretty simple. Now, like I said, often fair value gaps, they act like magnets, pulling price back to fill the gap. So what we could expect from here, from this example, is price to continue maybe a little bit, or consolidate, or directly go down to fill the gap. Prices wanna go here, then we have a candle opening here, let's say, it fills the gap, and then it might continue higher. Okay, very, very simple. But like I said, fair value gaps, they almost get filled. And one more thing, I'm gonna say this right now, I didn't write that down. It doesn't have to fill the whole gap, right? It doesn't have to do like this. It can just do like this, till the middle. Little bit, just fill it a little bit and continuing. It doesn't have to be the whole gap. Attention please, because they don't always get filled. I said this before, 90% of the times, from what I have seen, 90% of the times, these gaps, they just get filled. But there are exceptions, like everything, and they don't always get filled. That's why we cannot purely base on fair value gaps, right? If you look at the chart and we see, oh, fair value gap, we wait for price to get in to fill the gap, and then boom, we place the order. It's not gonna work. We need a lot of order confluences. But it's a really, really useful tool, guys. Like fair value gaps is really useful. And last but not important, size does not matter. Just like size does not matter, we have one candle and we have another candle, and then we go a little bit higher and we have this candle. Now let's say that the wick from this candle is like here, and the wick from this candle is like here. Okay, for example, now you be like, okay, there is no fair value gap, but there is. Okay, it might not be a big one, but there is. This mini gap is also considered a fair value gap. The size don't matter, guys. The size don't matter. Sometimes you're gonna see really big fair value gap, and sometimes you're gonna see a really tiny fair value gap, and you will still see that it gets filled, right? Market can just go a little bit and still fill this gap. Like it happens. Size does not matter. And those are the only rules and the only things you need to know about fair value gaps. There is nothing else. So if you look at the chart right now, if you look at here, we take the wick from the first candle, they went all the way till here, and then the wick from the third candle, which is like there. What can we see? We had this gap. What does price do? Price goes inside a little bit, boom, goes down. All right, very, very simple. And this happens a lot of the times, but does it happen all the time? Well, down here, look at this. This is what I mean. The gap doesn't have to fill the whole gap. You see, boom, imbalance, price touches it really a little bit, continues lower. All right, very simple stuff. But if you look here at the right side, for example, tiny fair value gap, it never got filled. Here, the same, it never got filled. So, like I said, you cannot purely base on fair value gaps, but they are a really useful tool. And how higher the time frame, how more power the fair value gap has, right? I'm gonna go to a higher time frame now. So guys, as you can see, I changed to Euro USD right now. We are on the 1 hour time frame, and let's just spot fair value gaps right here. What do we have? This is a fair value gap. Does it get filled? No. What do we have upside? Fair value gap. And if the price does not have a wick, like for example here, if the candle doesn't have a wick, it is okay. Fair value gap, price goes in, moves higher. Okay, very simple. It happens all the time. Like almost all the time. Here again, fair value gap right here. Price taps in, goes a little bit down. This is one thing, guys. You don't expect that. Like for example here, price went into the fair value gap. It still went down. You know, this is the 1 hour time frame too. It doesn't mean that if it fills a fair value gap, it's just gonna keep moving down. It's not like that. But you will see in this case sending pressure out of it. You know, and if we go to the 5 minute time frame, let me see. This is where price is right now, because today is Thursday, so the markets are open. What do we see here? We create a fair value gap, price goes in, down. Okay, here on the left side, what do we have here? Fair value gap. Price touches it and goes a little bit up. And sometimes, this is the last thing I'm gonna say. Sometimes the gap gets like totally filled to the other side, and it's, instead of reversing, it continues, and that's called a inverse fair value gap. The next video I'm gonna make is gonna be about inverse fair value gap, so you guys can see that too. For example, here we have this fair value gap, right? Price just completely ignored it. This is called an inverse fair value gap. And that's it. There's nothing else. Like I said, next video is going to be about inverse fair value gaps. This is one of the most easiest concept to get when you start trading. Like, this cannot be difficult, guys. And that's it, guys. That's it for this video. Fair value gaps are really easy. To understand when you start trading. It's one of the most easiest concepts. And at least in my opinion, when I started trading fair value gaps, I got it like this. So if you like this video, please hit the like button. It would really help me. Let me know in the comments what you want to see next. I already said I'm gonna make a video about inverse fair value gaps, but if you have any question or anything you want to see, just let me know in the comments. Jarno, I want to see this, or Jarno, I have a question about this. Let me know. I will be answering them. And that's it. Subscribe on my YouTube channel. I'm trying to do my best. I make trading really simple. See you guys in the next video.